April 2025. Happy Easter to all the Christians out there. I am going to be doing an analysis on the British pound, New Zealand dollar, because I find a very interesting opportunity. And as usual, I'm going to be using the Kenok system of demand and supply trading. In my private course, I can teach you what is demand and supply trading, but I can also teach it here. It's not a problem. Just that these videos are basically um, skewed to analysis. As you can see, the first thing when you look at a chart, as I would always say, is to look out for the trend. You can see that the market is trending based on what we see. You can see this is a high, this is a low. This is a high, this is a low. This is a high, and then the low has been broken. So we can say that the market is trending down. The market is trending down. Sorry for that little pause. The market is trending down, and then we expect it to come to this point and come here. At least, if you notice this line, I painted it pink. This is where I expect to take profit. Whatever happens after this line, I do not know. But my prediction is that the market will at least come to 2.20492 or 2.20523. This is exactly what I expect to occur based on the daily time frame analysis. So the question now is, how do we enter this market? Given the directional time frame, we've established a sell bias. How do we enter the market? We come to the H4 time frame where we actually do the main analysis. And now, based on what I see here, you can see that the market didn't just break this low, it also broke this low, so which is tending towards a very strong bearish pressure. Where is the liquidity in this market? The liquidity is here. Anything from here is liquidity. So for those of you who don't like to refine, you just want to trade, you can put a good trade here, a short position here, something like this to this point, to get a 1-to-3 ratio. It might not hit here, it might hit here. Nobody really knows what will happen in the market. All you just know is that the market will move the way it wants to, but liquidity is what moves the market. Liquidity and fair value gap. So we're going to have something like this in the H4. You can see, take out all these guys here and then come down. You're going to see something like this. This is exactly what I expect. But for those of us who like to be extremely careful, we go down even to the H1 time frame. The H1 time frame. We come to this point and we wait for another break of structure around this point in the H1 or in the M3. These are what we're expecting from the GBPNZD, given the directional time frame. Directional time frame is H4 and daily, based on the Kenok system of demand and supply trading. The relationship between these two time frames is very, very important to us because it's what we use to establish the importance of the prediction. If there's an alignment between these two and this one, it's even way more powerful. This is an analysis of GP and British pound and New Zealand dollar. Very simple, very concise. I will not put too much words here. Over time, I will teach you why and how I come up with these analysis in in a very detailed manner. But for now, this is what you get. You can see the break of structure was very clear. It broke the structure, took out this liquidity and went up. People would have put their stop loss here. It took them out. Came down again, broke the structure, took out this liquidity, came down, took these guys out, came up again, then came down. You can see that the market is a very manipulative experience. For those of us who are retail traders, we need to be on the lookout. When it comes to forex trading or trading in general, there are three things that are extremely important: how to identify a key level, how to identify liquidity, and how to align structures within time frames, across time frames, sorry. I repeat myself: how to identify key levels, how to identify liquidity, and how to align structures across time frames. These are very, very important skills when it comes to trading. If you can master these things, you're good to go, because you just need to apply risk management. And generally, trading is based on three things: analysis, management, and psychology. And most people teach you analysis. Nobody can teach you psychology. I repeat, nobody can teach you psychology. Yes, there are systematic approaches by people to manage psychology, but nobody can literally give you an algorithm as to how psychology works. It's a personality thing. There are people who are risk adverse. They take it gradually. There are people who are very aggressive. It's about understanding yourself. It's very important you get that. But you can be taught analysis, which is the basic thing everybody goes to a trading course to learn how to analyze a market. You can be taught risk management. It's all about calculation, but you can't be taught psychology. Hmm? All right, I'll cut it here. Hmm?